Hello, welcome everybody. Welcome back. SF Live episode 220 on this Monday morning. We're back in the studio. We're not in the field anymore, and I'm excited to be back here because I'll be joined in a few short seconds by Rohan Hazelton, and he's president and CEO of Norzinc. And we'll be catching up with him over on the PEA, of course, that they put out. But they already have an offtake agreement with Bolin, so lots of aspects to talk about with him about as well. Now, a couple things I need to get off my chest as well. So first things first, on November 12th and 13th, we're hosting the Deutsche Goldmesse in Frankfurt in person. So make sure to join us there and to catch up with CEOs. We have Osisko Mining, First Majestic, Osino Resources, and many others joining us there as well. And of course, we have fantastic keynotes. Mark Friedrich, Ronald Stöfele, Willem Middelkoop, many more. Keith Neumeyer, another one from the silver space. So make sure to join us there. It's free to sign up. It's an investment conference, so make sure to use that opportunity and catch up with the CEOs and the keynotes directly. Now that out of the way, of course you have to follow us as well here on YouTube and Twitter. I'll keep it short. Hit the like and subscribe button. Give us a thumbs up. Leave a like as well. And we'll see you later. Alrighty. Enough of that part. And let me switch over to my guest. That's why we're here. Rohan, it's great to see you again.
Great to see you, Kai. Thanks.
Thanks for coming in. Really appreciate it. And President CEO of Norzinc, I just mentioned in the intro. Why don't you give us a quick rundown of the company, and then we'll dive into specifics.
Great, thanks a lot. Norzinc is the 100% owner of the Prairie Creek project in NWT Canada, one of the highest grade, largest undeveloped zinc, lead, silver deposits in the world. We have substantial infrastructure from when it was first built under the previous owners in 1980 up to a 90% completion, but never mined. So we have infrastructure of 1,000 ton per day mill, other surface infrastructure, and 5 kilometers of underground workings, which do allow us to a bit of a head start on this project. I've joined in May. Very excited to join our strong team with the primary mandate to finance and build the mine and be in production by the end of 24.
Wow. Okay. Strict timeline.
Yeah.
The end of 24. So why don't we start there? Actually,
Sure.
You only started recently. Right. You joined in May, if I'm not mistaken.
Yes. Yep.
Right. Why did you join? Let's start there, and I'm sure the production timeline has something to do with it.
Sure. Yeah. No, absolutely. I mean, the main reason joining is the geology of this deposit. I mean, it truly is a world-class deposit. That is really ready to be built. It's for a number of years it went through a lot of permitting and timelines and now we're fully permitted at the original feasibility study, and we're just now going through the final permits for the expanded case. That was what we outlined in the PEA. For me, every world-class mining company is being built on a strong deposit and mine, and I think that's what we have here in the case of Prairie Creek. And I think there's a chance to build a really strong company around it.
Yeah, fantastic. Let's talk about your background just a little bit more.
Sure.
What did you do before joining?
Sure. Yeah, I've been about 20 years in the mining space. I'm a CA or CPA by background. Thanks a lot, Kai.
Yeah, no,
great.
And
Spent the first 15 years of my mining career with Wheaton River that became Goldcorp, a number of spin-off companies, including Silver Wheaton, creating Silver Wheaton. In the last 5 years, was working with a few juniors out of Toronto, including one primarily in this space, Ascendant Resources with silver, zinc, lead, and some very relevant experience as it comes to off-takers, which I'm sure we'll discuss, and other aspects of that. But yeah, my primary, I think skill that I bring to the table is not only operational experience from the past and mine building. I've built 5 mines, total financing, being involved in over $2.5 billion, and numerous M&A transactions, but is really bringing that financing expertise, and that's our main goal, to get this project financed and built.
Yeah, fantastic. Let's talk about the history of the project.
Sure.
Real quick as well. It's like something that led to the PEA.
Sure.
Like what kind of parameters, like what kind of information did you have in the past? Like you only started in May, obviously, so you did not generate that, but what did you build on with that PEA?
Sure. I mean, the most recent history, just to go back to that, and then maybe I'll touch earlier, is the 2017 feasibility study that was put out at the end of 2017, outlining a 1,600 ton per day mining case over about 15 years of mine life at that time, and really and I guess another key aspect of this project that's being outlined since in the last sort of 5 or 10 years is building this mine with an all-season road. It is very remote in the Mackenzie Mountains in NWT, and when it was first built, as I mentioned, in 1980 to 82. Or constructed, it was all that material was brought in through a winter road only, and we've analyzed that case, but for for the last number of years, I mean, really the case that makes the most economic sense is an all-season road, and that's really the crux to the timeline of the 3 years that I mentioned, which is to build an all-season access road requires about 3 winter campaigns and 2 summer campaigns to get to that completion. With all the infrastructure that we have that we've mentioned, if we didn't have the geographic and seasonal constraints, this could be a mine that would be up and running in 15 to 18 months, just to give you a sense of the kind of infrastructure that we do have. And as mentioned, the evolution from that was thinking of how to optimize the mine, partly as capital costs have continued to increase in the space. A higher throughput case was what was really determined to be optimal at 2,400 tons per day. In terms of a mining rate, and that's what we've just put out in the PA, and that's what we're finalizing the permits on. Just to take one step back, just because the history is very interesting. The history of the deposit and the discovery goes back to about 1925, as some prospectors were coming down the Prairie Creek River, which is again in the southern part of NWT, and saw a main quartz vein just expressing right there at surface. And the geology, the 70% or so of the mine is in the form of a main quartz vein. It's extremely continuous, homogeneous. It's about average 4 or 5 meters wide, about half a kilometer deep, and for now goes on to sort of 2.3 kilometers, and we expect it to go on for a very long time. But expressed on surface, they discovered that a number of exploration over the years is what led to the original construction under the name Cadillac Silver Mine, and again it was built to essentially a 90% completion, and unfortunately with the crash in silver and commodity prices at the time, that entity went bankrupt, and a number of years later our company picked it up under the previous name of Canadian Zinc.
Gotcha. So 20.3 year mine life, quite a bit. Previous operator drilled, as you said, they also built it 90%.
Yeah.
Like, how confident are you in the work that they've done and also in the resource definition drilling?
Yeah, we're very confident because actually everything that's in our resources is all drilling since it's been owned by Canadian Zinc. And that's over about, let's say, approximately 240 diamond drill holes and a lot of channel sampling that over the years that the company was able to do, given that we have access, right into parts of the underground workings. Part of that is drifts and development, but part of that is right into ore stopes. And so there's, over 4,000 different assays in different parts of the mine. So we feel extremely confident in the ore body, both in terms of, measured and indicated, which if you go back to our 2017 fees, that's now a historical reserve for the moment until we come out with a new updated feasibility. And then we also have drilling into what we have categorized right now as inferred resources. But that's about 10 million tons in measured and indicated at an average zinc equivalent grade of about 23%, 24%. So again, one of the highest undeveloped deposits in the world.
Rohan, I got to ask you, you put out a PA after you've already had a feasibility study on the project. Why did you decide to actually take it down a notch instead of maybe just renewing a feasibility study? Sure,
mainly for the timeline and in order to build on what was a fairly aggressive timeline in terms of financing. So feasibility, which we're working on now, will take sort of 6 to 8 months from the time that we started. So we're looking at a completion date of early Q2, and I wanted to get out numbers that both the average market retail investor, but even other stakeholders, including non-equity and other financing parties and other non-financing parties could understand what does this project really look like. We have a lot of information we've been studying for years, and about what that project looks like, and but it's it's difficult to be able to explain that to the outside world, and that was really the point of this. Come out with it quickly. We announced it. We got the results out in just over a month, and we'll get the actual full report out within 2 weeks from today.
Oh, fantastic. Okay, that's rather quick, because I wanted to look at some sensitivities in there as well, and in terms of input parameters, cost for, or not just cost, but pricing. Zinc prices have been going higher and higher lately as well, so I'm just curious.
Yeah, and we did, as you're probably aware, put in there just what the high level numbers look like at $1.50 zinc, which is pretty close to today's spot. But as you know, we've seen prices recently well over $1.70. And we see certainly in the short term, but I think even in the macro longer term sense, strong fundamentals for zinc market.
Yeah. So what are some of the differences between the feasibility study and the PEA that you've put
Sure.
out now, and like some of the levers? I think throughput was one of them.
Yeah, throughput is the main difference, and so that was going from 1,600 tons per day to 2,400 tons per day. As part of the original feasibility plan and this study, we do have a dense media separation circuit that is the beginning of the circuit, and that'll take off about 25% of the material, and that goes to a waste rock pile. So really, our mining or a milling throughput rate will be closer to 1,800 tons per day. That still requires an upgrade to the mill, which, as I mentioned, there's one ball mill in the mill at 1,000 tons per day. But so that's really the primary difference. I mean, there's some offshooting difference, of course, in designing the mine plan for that level of throughput in terms of number of faces needed, and to a certain extent the waste rock pile, which will be accumulating faster and designed slightly different. But yeah, overall it's really not. It's more about more material. But the overall principles and design are the same.
Let's break the PA down just a little bit, because I still see a fairly high capex for a 90% completed project. Where's the money flowing? What do you have to invest in?
Sure. I mean, a big portion of that is the fact, as I mentioned, that it is a very remote project, and so the road is about $90 million US of that amount, just under sort of 30%. Even if you look back at the prior fees, it was around that level. So the road is a substantial portion of the upfront capital, and then it's over a mix. I mean, of upgrading the mill, which in very rough terms, we probably can use about 50% of what's in the mill. Upgrading that and ancillary infrastructure, itself is sort of another third or so of just under a third of the capital, and then the rest in a good chunk is in the mining, and of course the overall overheads of putting together a project like that in terms of EPCM and overall camp costs and that.
Okay, got you. Like taking it to the feasibility level next now, like you're planning to put it out in Q2 2022.
Correct.
What are the plans? What will be changing? What's some of the levers you can pull?
Yeah, so I mean, I think one of from the flow sheet and the mill sense, one opportunity we are looking at is ore sorting versus dense media separation. There is an opportunity potentially. We're analyzing that right now. We got a study going on that may be able to remove the same or more of non-grade material for even a lower capex and lower operating costs going forward. So that's probably a primary opportunity that we're looking at. There's once it comes down to actual execution plans, from the fees in terms of executing on the project, and I mean there's lots of opportunities in terms of contract negotiations, potential equipment that can be sourced either through different kinds of contract negotiations, or potentially even some areas where used equipment makes sense. Obviously, we're starting with a used project, but we'll be upgrading it significantly.
Yeah, let's talk about the road. I think that's a major factor. You said $90 million, 90
yeah.
million. That's a big chunk of change. Okay.
Correct.
The NWT government, are they going to be chipping in? Like, what's the relationship there as well? Do they want the project? Like, let's talk about NWT in general as part of that question maybe as well. Sure.
I mean, I guess I would start with three main stakeholders and the NWT being obviously a prime one. The federal government through the various relationships that we have in permitting, and also the and the indigenous communities that we have. All three levels are very supportive of the project. As far as funding, we've been working on a number of angles as far as infrastructure type funds. As of yet, we haven't been successful in obtaining those. Although I think especially even though that's at the federal level, I think we will see a renewed emphasis on resource development, coming initially from the federal government, and then supporting the NWT, which we hope and expect will translate into some additional support for us. But we're working hard on all those angles. But as far as relationships, we have a strong relationship at various levels of the NWT, including right up to the premier and minister level. And they've been, as I mentioned, we've been going through, an updated permit process as it relates primarily to really the site for the 2,400 tons per day. We got through a major milestone in September, which was that we be past the level that we don't require new environmental assessment. And we think, that's a major milestone that, shows support at a variety of levels. I mean, specifically that's at review board level in the NWT, but essentially, we have support at all levels.
No, that's a major one, obviously. So we started scratching on financing with talking about the infrastructure investment. Boliden, you have an offtake agreement with one of Sweden's or Scandinavia's largest miners, obviously. Are they going to be part of a financing package down the road?
So I'll just clarify that with Boliden, it's an MOU at this stage, but we've been talking to them for a long time. The company had a previous MOU which we renewed and upgraded really for an expanded capacity as part of the updated PEA, and we're still in very close discussions with a number of other offtake parties. I guess what I would say in about offtake financing, in general, that is very likely to be a part of the overall financing package, whether it's potentially direct from an offtaker or supported by export credit agencies that support offtakers, and that would be on top of what we see as a fairly, I don't want to say standard, but kind of standard project finance package for the overall project that would be debt, equity, and very likely a very strong stream component given the high silver component.
That makes sense, actually. That makes a lot of sense. Well, it's still $300 million. Let's break that down just a little bit. What would the ideal, I love the question, what would Rohan do?
Sure.
Right?
Sure,
in an ideal world scenario,
sure.
How would you like to structure it?
Sure. No, I mean these are very rough numbers, but if you take 350, let's say US, and because we do expect to make some strong progress this winter with building the first phase of a winter road, and we're working on a financing package specifically for that. So if you put us, what's left is about 350 million. In ideal terms, it would be somewhere in the range of 175 to 200 million debt, 100 million, 75 to 125 million of a silver stream, and the remaining equity. So that's just sort of the plain package. That's not considering where could offtake financing, leasing, other types of financing fit in.
Let's talk timeline as well.
Sure.
So feasibility study only in Q2 2022.
Right.
Do you think you'll get the financing package together before you put that out, or is that something not the off-takers, but your financing partners would be looking for?
Sure. I mean, I'm targeting, sort of the middle of next year for the overall project financing. I mean, that's still a pretty quick, turnaround, although this PA is really the launch of a more formal process with a number of financing parties that would look at either comprehensive package or look at, individual components of what I described. And so I think, middle of next year or going into Q3, or possibly into Q4, if things started to slip, what I'd be looking at is bringing in one of those components of that financing, earlier in order to, continue to make those commitments that we'll need to make to stay on schedule.
Yeah, you probably have to order some long lead time items and things like that. Like ball mills are usually like 35, 40 weeks, things like that, right?
Right.
Okay. I think we tackled the PEA and the project itself. Let's talk cap structure. Okay. Close to 700 million shares outstanding.
Correct.
How much of a hurdle is that, and what do you want to do about it?
Sure. Yeah. No, it is a lot of shares outstanding. I mean, one thing, it is a direct result of the fact that this has been in the same legal entity, for almost 30 years, developing, moving this project forward. And certainly, I think one thing we all know is, in mining, you often see some sort of change in capital structure or even in entities, every sort of 5 to 10 years. So that's the history of why all the financing that's been raised has been in the same legal entity. We're working hard on building a stronger investor base and support base for that in order to put shares in strong hands to build on the equity platform that we need to raise. And I think that started really with this summer when we closed in early August on 7.2 million Canadian, which included an additional 1 million from our strong supporter of Resource Capital Funds, RCF, which was just under sort of the 20% level. And what that means though is we brought in over 80% of other non-RCF funding of strong institutions, primarily Canadian institutions and funds, that are interested in the story, and we're going to continue to build on that over the next 6 to 9 months, and I expect to see a strong hopefully a strong component of existing shareholders come into into what would be the equity component of a project financing package.
I have to ask you, since I have you here, rollback anytime soon?
It's definitely something we're looking at, and I would, with the right timing and the right catalyst, the right, analyzing what the right number would be. But yeah, it's a lot of shares outstanding that we'd like to roll back, take back, and do it at the right time. And I think sometime between now and that project financing, there'll be the right moment for that.
Yeah. Okay. Challenges with the project. We got to talk about it.
Sure.
Every project has a skeleton somewhere in its closets, right? So, like, what is something that's holding you back, or something you would like to improve on the project?
Sure. I mean, I think the primary challenge is how remote it is, and so we've already spent some time, talking about the road. There's a lot of remote mines in the world, but when you add remoteness with the mountains and the weather, it does adds challenges. So that's and that'll be ongoing, but that's the reason for building a robust road that can be an all-season road that we can truck out, concentrate essentially 365 days of the year. The second major challenge which I imagine a number of your listeners are aware of is the there's high mercury content in the ore, in the rock naturally, and it kind of puts it on par with a lot of the mines in the Iberian Pyrite Belt of southern Portugal and southern Spain. So that primarily reports to the zinc concentrate, and therefore means that there's a certain number of it's not all smelters that we can deal with on the zinc con. We're pretty much can deal with almost anyone on the lead con side, but that's why it's important that the parties that we're already dealing with right now are strong players who can responsibly remove and deal and capture that mercury, and that again that's a strong I think having Boliden support. And again, there's several others that we're dealing with behind the scenes. Is a strong vote of confidence of the quality of the concentrate that we have. So we think we absolutely have a ready market to sell both cons, but it does come with a bit higher cost of treating the mercury, and that's reflected in the PEA. So.
No, fair enough. I appreciate you mentioned that. It's like dealing with that. It's like that's been an issue for I would say an issue, but it's like something that needs to be addressed for a while, right? So appreciate you mentioning that. What's next for the company now? Like technical report coming out in 2 weeks. You're not doing a lot of exploration, correct?
No, we had a small exploration program this summer, and we did get some strong results, which were nice and very high on the silver side. It was about almost 400 grams per ton silver, which is about 3 times our normal average grade, and very high, I think closer to 20% on the zinc side. So they were good results, but unfortunately it was not as productive of a program as we were hoping to have. We did struggle with productivity of drillers this summer, and I understand we tried a number of instances to bring in additional resources, and all drilling companies were flat out this summer. I'm sure you've spoken to other.
I've heard,
companies. So
being on site,
going into next year, again, depending on our confidence in availability and productivity, then we would look to potentially continue to do some. Where we would do it is similar to what we did this summer, in and around the drilling in the inferred resources to bring up the confidence level, or convert some directly into measured and indicated. Where the drilling was this summer was in that kind of boundary between measured and indicated and inferred, the area where there's a second main ore type that we have, which is the Stockworks ore type, and that gave us some more information about kind of to a little bit the size of the Stockworks, which did expand in the recent resource estimate.
Does that mean higher grade as well? Quicker payback, things like that. That's what I'm looking for when it comes to exploration.
Yeah, I think there's 2 aspects. So one is, we certainly, in this particular campaign, we were able to demonstrate, some of those high grades, especially on the silver side. So we would be, looking to do more of that. And then potentially, drilling that would be nice to do, but it's very expensive. Is the mine does dip down fairly steeply, just as the topography goes up in the mountains. And now we have a drill hole from a number of years ago that's 2 kilometers past the existing resource, and then 2 kilometers deep. And so, it would be nice to do a few more potentially, in theory, testing, in that area to show the continuity that we strongly believe is there based on rock type. But they're very expensive to do. So that would be, down the road, depending on availability of capital and what makes sense.
Fantastic. No, Rohan, thanks so much for coming in.
Great.
It's great catching up on Norzinc and great speaking about the project. It looks like it's coming along nicely. We're going to see a lot more milestones being achieved over the next few months. So can't wait to catch up with you again soon.
Great. Thanks, Guy. Really appreciate taking the time.
Yeah, no worries. Everybody else, thank you so much for tuning in. This was SF Live episode 220. Make sure to join us here on Facebook. Not on Facebook. We're not on Facebook. We're on Twitter and LinkedIn, of course, as well. Jesus, where am I today? And at YouTube, of course. Hit like, subscribe, and all the good stuff. Leave a comment, and make sure to follow us for more. And see you in Frankfurt, I hope. And that's it from us. We'll be back with more this week.